Welcome to today's session in support of IT Asset Management Awareness Month. Today's sponsor is eTelligent Solutions, and representing eTelligent is Brett Hasselbaugh, their CEO. As with all the presentations for ITAM Awareness Month, embedded in the presentation itself is a slide with a letter noted that you should keep track of. At the end of December, if you have participated in all 23 events, you should be able to unscramble the collected letters and come up with a catchphrase describing ITAM, the organization. So to get things started, I'm going to turn things over to Brett. If you'd please start the presentation.
Thank you, Lynn. As Lynn mentioned, I'm Brett Hasselbaugh. I'm the president of eTelligent Solutions. Today we're going to talk about our solution for software asset management or software license management that we focus on by creating an internal software market. And we'll talk about how that's done and some of the benefits that we've seen from doing it. So what we're going to talk about, first of all, this is the third presentation in a series. We started back in January of this year, and I'll talk a little bit more about the previous two. But the key point to consider is that this presentation builds on some of the concepts that we talked about in the previous presentation. We're then going to go into what we see often in clients as they attempt to manage software by setting up what we call the software license pool. And we'll show some of the challenges we have found and some of the opportunities that we've uncovered and what we've done with those opportunities. The last thing we'll talk about is one that we see and feel is largely overlooked, and that is how to change the behavior of the organization to support our efforts in bringing up a software asset management or software license management solution. So as I mentioned, this is the third in the series. All of them were done as webinars in conjunction with ITAM. The first one was done back in January of this year, and it's a concept that we call the Managed Software List, and you'll hear me refer to it as the MSL throughout this presentation. Succinctly, the MSL is the collection of software titles that your organization is currently focusing your SAM efforts on. And the starting point that we recommend is all of your high-value, high-risk software titles, and you'll find, once you identify those, that they represent maybe 10 to 20% of the actual number of titles, unique titles that you have in your environment, and yet will cover somewhere between 80 and 90% of your value and risk. So that's really the best place to start because it keeps the number of titles down to a manageable level. If you want to know more about that, and there is more to know about that, we suggest you go out to our link and watch the recorded webinar out on our link. It's provided for you here. The second one was in June, and the second was about bringing up or stepping up the financial discipline in ITAM. And it primarily focused on the creation of an accrual account or a bank account and how that bank account would be set up and how it's used to assist in remediating if you have unexpected settlements due to audits, due to true-ups, and also the day-to-day handling of this internal market. And you'll see when we get into this internal market how it depends on this bank account. Again, the link is provided for you. If you did not get a chance to see that, I highly recommend going and learning more about setting up a bank account. It is one of the prerequisites to setting up an internal market. So let's talk a little bit about this license pool model. We see clients, usually when a client is working towards bringing in software license management, software asset management, this is the model they're working to. And it's conceptually very easy to understand. Let's start with user A. User A wants software. So in the license pool model, generally they raise a purchase request. They usually have to get that approved. But then once that purchase request is approved, they go to procurement with that. And procurement is aware of a thing called a license pool. They know if there are licenses available within the organization and how many are available. So they check that pool. If there's a license available in that pool, they'll go ahead and fulfill that order right out of the license pool, and the user gets their software. No purchase event happens because they already have the software. If there isn't an available license in the pool, then it's purchasing as usual. Their requirements are, whatever their policies are, they'll follow their normal process and go procure the software, and the user gets their software that way. Now, how does this license pool get established? Well, sometimes it's through an over-procurement of licenses. You buy more than you need, and then you have some left over. Sometimes a project spins down and releases licenses, and they are recovered and reclaimed back into a pool. And sometimes you might be able to convince a department or a user to give up software that they're not using. You might be using metering and identifying low utilization on some software titles, and you might be successful in going out and convincing someone to give up some of those licenses. When we studied this first, we found some challenges with this model, and they're all behavioral in nature. The first challenge we found was somebody finds out that there are licenses available in this license pool. What's to stop them from coming and asking for them? How will you know whether they legitimately need the software or whether they just want to go get it because it's free? And so there needs to be a demand. We felt there needed to be a demand throttle, a natural demand throttle that would challenge users to only request it because they really needed it, that they were willing to give up something of value in order to get something of value. So that was challenge number one that we saw with this model. Second challenge is, why would someone want to release software to this license pool? In a lot of organizations, we find that the software is purchased departmentally. So the department purchases the software, they generally feel like they own it because it came out of their budget. So why would they want to give it to somebody? The other thing is, it may be difficult to get the software in the first place. The whole procurement process might be long, arduous, lots of approval levels. Depends on the organization, but that could be a deterrent for why someone would want to give software back, because I just don't want to go through that process again. So now that I have it, I'm going to keep it. So those are two of the behavioral issues that we have seen that work against this model. The third one is the most interesting, the notorious user C. User C, for whatever reason, decides that he or she will go get software somewhere else. They won't go through the prescribed purchasing channel. They'll download it directly from the web, go out to Staples and buy it on a credit card and expense it. Problem is, every time they do that, the software usually gets discovered. So you see that there's a deployment of the software, but you're hard-pressed to find the purchasing record. So you've got no way really to prove that you own the software. Second issue is you have no idea what entitlements they came, what license terms they agreed to. They could have bought an OEM license, can't be transferred to another machine. So those two things create issues. And we have not found an organization yet, no matter how locked down they think they are, that does not have this activity going on. We call it back channel acquisition. So every organization we've worked with has some level of back channel acquisition going on. The issue with back channel acquisition is if you don't address it, you go through the trouble of establishing a compliance position, and now you have a report that shows what your compliance position is, you'll be hard-pressed to hold that position because of this back channel acquisition. You'll constantly be finding yourself out of compliance as a result. And now that you've documented the fact that you're monitoring compliance, you've got to do something about it. You could put yourself in a worse position. So how do we actually work through some of these? Now, one of the things that's interesting to note about this diagram is that these behaviors are codependent. You can't consider them in isolation. For instance, let's say that, okay, let's put a little bit of a challenge in place for people who want to come get software so they don't, just get it for free. That throttle, let's make it they're going to have to get it approved. They're going to have to get it, do justification and justify why they need it. We'll put that in place. So you put that in place, and what you've done is you made the purchasing cycle time longer. And when you do that, all you do is encourage the other two behaviors, which is someone not want to give up their licenses because they don't want to go through that process, and or that infamous user C going to the back channel to get their software because it's faster. So one of the things that we have found is whatever you do, you definitely have to decrease and minimize the cycle time from request to actual achieving and getting the software. You have to minimize that cycle time. No matter what else you do, that goes the furthest to decreasing these negative behaviors. And unless you have that cycle time from the user requesting software to it being approved to it actually showing up and being installed on their machine or the server, once you've got that down to 10 minutes, you've got room for improvement, because that's how long it takes our solution to deliver the software. So let's talk about this market a little bit and some of the changes that are necessary. You do have to make some changes to set this up. Fortunately, the changes are largely transparent to the business, and the business will see it mostly as a net benefit to them. They'll actually applaud this. Finance will applaud it as well. So the main changes are between procurement and ITAM. The interfaces change. In this model, what happens is the user will go to ITAM, and they'll request software from ITAM. And ITAM will give them an authorization to use the software, not necessarily a license. They'll give them an authorization. And the authorization is, as its name implies, they are now authorized to install and use that software and access that software. Periodically, ITAM will watch the deployments, the authorizations, and compare those authorizations to the entitlements owned, and if need be, go to procurement and actually procure the mini true-ups. Usually this is done on a monthly basis. Now when a user goes to ITAM and requests an authorization, and they get their authorization, that authorization may be granted, and there may not be a license at that point in time to cover that authorization, which would mean that software was authorized to be used, and you're now at that exact point in time out of compliance. Then the question becomes, well, what is compliance really? Well, it's as defined in your license terms and as defined by the arrangements that you have with the vendors that you're purchasing software from and the publishers that provide the software. In most cases, those publishers are reasonable, and they don't expect you to be at any, at all given times 100% instantaneously compliant. They'll give you some latitude. And what we suggest is take advantage of that latitude. The most frequently we've seen vendors expect to have you trued up is monthly. If they expect monthly and they'll allow you to do it monthly, we recommend doing it monthly, because you wait till the end of the month, you might find you don't have to buy anything because some harvest events occurred, and we're able to cover, return licenses to the pool, and we're able to recover those requests. So in this change, what happens is the end user now goes to ITAM. ITAM takes care of procurement, but they do it on a much slower cycle time with procurement. The user sees this as a benefit a couple different ways. One is, now this may or may not apply, it depends on the organization, but some organizations still hold the user accountable for software they purchase for the license, proof of license. In this new model, the internal market model, that expectation moves over to ITAM. ITAM now is accountable for making sure that the organization stays in compliance. Again, this is with the focused title, the MSL titles. The end user also now does not have to endure the procurement cycle. When the user wants software, they go to ITAM. ITAM, once it's been approved by their approving manager, ITAM issues the authorization. They get authorization to use the software. They're up and running. As far as they're concerned, all they need is the authorization and the software, and they're happy. We do not have to wait for the procurement cycle to take place, which shaves a lot of time off that cycle time. So that's how they end up seeing this as a net benefit. Now, one of the controls you need to put in place is you work with procurement to say, okay, if the user comes to us by mistake or on purpose, we'll reroute them over to ITAM so they can get their software through their request fulfilled through ITAM. It's one of the controls you put in place to make this work. We've had clients actually go out to the vendor community as well and extend those controls out into the vendor community. One of the things I forgot to mention is as we go through this marketplace, this is actually proven. This has been proven over the last 4 years to work. So 4 years ago this was theory, but now it's actually proven, and we can show to clients who have actually done this and have seen these benefits that we'll talk about as a result. Now, of course, ITAM there's some process change necessary, as with any ITAM solution. There's process change necessary, and then there's automation that is necessary to keep track of these authorizations that are granted and how the licenses that are owned are covering those authorizations. So that can be done many different ways, many different tools out there on the market. Our particular solution is what we call our Management Information Exchange. Okay, if there's a piece of gold in this whole presentation, this is it. This took us 2 years to figure out, and we feel that the industry at large still has not figured this out. This is the one gold nugget. What you want to manage is the authorization, not the license. We started out 4 years ago with the concept of the license pool, trying to manage licenses, and finally the light bulb went off, the aha moment, that what we really are dealing with in this marketplace are authorizations. We are offering authorizations to end users and recovering and harvesting authorizations. And in the back end, just trying to make sure we have enough entitlements to cover the authorizations. If you focus your energy on managing authorizations, the benefit you also create out of that is that you are managing your usage of the software. your demand for the software and your usage of it. You put management on that, then you'll actually reduce your usage or optimize it, I should say, not necessarily reduce it, but you'll optimize your usage. So focus your energy on managing authorizations. Let ITAM deal with handling to make sure there are enough entitlements to cover those authorizations. So let's talk about what this looks like when you set up this internal market and how it looks a little bit differently and how it addresses those behaviors that we talked about earlier. We'll start with user X. User X wants software. If you recall, in the internal market, they go to ITAM for that request. Now, generally, we recommend that you automate this request through some sort of self-service portal. You may already have something like that, but you definitely want to, as we mentioned, the carrot you want to put out there is to make the prescribed channel for accessing software or getting software the easiest, most painless, most efficient way of getting software. It goes a long way to deterring those other behaviors that you're trying to deter. So you want to put energy and focus on trying to make the request process from end to end as fast and simple as possible to entice users to use it. The software request gets routed through an approval process. Approval manager says, yes, I agree, this user is allowed to have this authorization, I agree to pay for it. Once that approval process happens, it gets recorded, the authorization gets recorded, and if you've implemented this as best as possible, our recommendation is that then triggers an automatic push to your electronic software distribution. You maybe have SCCM, Altiris, whatever you've got, automatic push down to the end user. This whole cycle time, as I mentioned, we've been able to get it down from the initial request to the software actually showing up and being installed to 10 minutes. Minimum cycle time, 10 minutes. And that was in contrast to what used to take anywhere from a week to 2 weeks from the time we went through the procurement process, because that wasn't the end of it. After the procurement process, then you had to call the help desk and either have the help desk walk you through installing it or have a tech dispatch to come out and install it. So that whole process has been removed quite a bit. Now here's the demand throttle. If you recall, what's to stop a user from asking for software when there are excess licenses available? The thing is, you're not dealing in licenses, you're dealing in authorizations. User X needs software. They don't have it, they need it. They come to ITAM and they request the software. They have full expectation of having to pay for that. That was the expectation in the past when they went to procurement. So what happens is you sell them an authorization. This is the internal market we're talking about now, starting to kick in. You actually sell them an authorization. Doesn't matter whether you have a license available or not. They need something they don't have and are willing to pay for it. So you sell them an authorization. What happens to that authorization? What happens to that financial? The financial transaction is recorded and actually feeds forward into the ERP system, their ERP system, and actually shows up as a charge against that cost center. Now, first you might say, well, wait a minute. This is a chargeback scheme. We don't do chargebacks. If you stop and think about it for a second, is it? Yes, you are charging their department or that cost center, but from the end user's perspective, nothing has changed in terms of the financial transaction. Originally, they would go to procurement with a full expectation of having to pay for some software, pay street price for it. They'd go through that whole process and they'd get their software and they pay for the software. And the same thing would happen. Their budget would get hit internally. The budget would get would get subtracted. So from their perspective, it's transparent. They don't see anything different in what's being charged and how it's being charged and when it's being charged. Now what you have though now is there's a built-in throttle. Someone's not going to come ask for something if they're not willing to pay for it. And so that stops the artificial run on licenses when people find out they're available. So again, you're dealing in authorizations. Let's talk about user Y. User Y wants to harvest. Now, why would they want to do that? If you recall, what's their benefit? Why would they want to harvest software they're not using? So say they go through the motions. They harvest the software, gets recorded as a withdrawn authorization, and the rights are harvested from them or from their machine. Depends on how the rights were initially, the authorization was initially granted. But what happens is they get a credit. Basically what they've done is they've sold their software back. Now, what's to stop someone from just saying, okay, I'm going to sell all our software in our department? What happens is you can't control when the credit happens or if it happens. You only get credit when the next user comes along and actually purchases an authorization to use that title. And so if you're trying to sell back titles that are not in demand, guess what? You'll harvest them, but no one's demanding those licenses. They're at end of life. No one's going to pick it up. You won't get a credit for it. and you don't know when the next person is going to come use it. So there's the games that people might want to play once you put financial motivators in place, such as, hey, our budgets, we need to make it look good this quarter, so we'll sell all our software rights and then get them all back at the next quarter. Since you can't control when it's going to get credited, that really doesn't work. So we thought through all of these ways you could scheme the system, over the years to make sure that there wasn't any way to scheme it. Where does the money come from? It comes from the next user. They actually purchase it at street credit, at street price, and the credit goes back at street price. So to the organization, it's a wash. No money left or entered the organization as a whole. To the individual departments, yeah, that was a financial transaction. One department benefited. They got their software. They sold their software basically to another department. That's really what happened. That's the internal marketplace, buying and selling the software internally. But what it's resulting in is a repurposing of licenses from one place to another without having to go to the street to actually purchase them, by motivating people to want to give up the licenses. Let's talk about that infamous user C, who is now user Z in this. This is the back channel user. What about the back channel user? So let's say the back channel user goes to their favorite place to get software, which is not where they're supposed to go. Usually, unless they're doing it completely illegally, they paid for it. They downloaded it from the web on their credit card, or they went out to Staples and bought it again on a credit card and expensed it. Problem is, as we mentioned, the software will get discovered, so you'll see a deployed position, but you'll be hard-pressed to find the purchasing record. And you won't know what terms they signed up to, what entitlements they got. Thing is, they paid for that. Okay, so what happens? Well, it gets detected, and it gets forwarded over to the tracking system. It's tracking the authorizations. The tracking system simply says, am I showing an authorization for this title on this particular machine? Yes or no? No. That's rogue, then. It's installed through a rogue process. I'm going to go ahead and authorize it. Authorize it retrospectively, and now an authorization. I am tracking an authorization for that title. And guess what? Any authorization, whether the user comes and asks for it or whether they install it and it gets discovered as a rogue, gets charged. What happens is they get charged twice. Now, you don't just spring this on people. This is something that's communicated to everybody, and it's communicated throughout the organization well in advance. So everyone's had ample warning that if you choose to engage in this back channel behavior moving forward, just know that you're going to get charged again. Now, what this does is this negates this behavior. It doesn't stop it, although we have seen that it significantly reduces it. It does negate it. Why does it negate it? Because it doesn't matter that they've installed it as a rogue. You're going to collect enough money from them to go buy a license, a proper license. So you're sure you bought the right entitlements to cover the license and what you intend to do with that license, such as transfer it. So this was very important. As a matter of fact, of all the behavior drivers, they're all very equally important, but this one we have found to be very effective. And I say that because we've seen a lot of different attempts to shut down this back channel, and nothing has worked better than a financial motivator to, again, it doesn't shut it down completely, but it does negate it. So let's look at how some of this actually occurs. This is a busy chart. It may not be, well, it's legible, but you have to look a little closely at it. And what we're trying to depict here is what you've got going on the left, what we call uncontrolled, might also be called probabilistic, in that this is happening day to day in a random manner. You've got people asking for software. You've got auto discovery finding rogue software. That's authorizations going, getting created. Then you got authorizations being removed by disposal feeds coming back from your disposal vendors. Usually you want to set up so that you harvest any remaining authorizations off of any assets that get disposed. You've got the incentive harvest that's going on. People are actually trying to, purposely give up software to get the incentive. And then you have aging going on, where you've got authorizations that are being tracked, but auto discovery has not seen that software actually installed for some period of time. We go ahead and remove those authorizations. And all that happening in a random manner. So you let that happen and unfold, and as authorizations are being created, you also have harvests happening. So at the end of the month, on the right side, on the controlled side, that's when you kind of look at the picture and say, okay, do I need a true up? Because you might not need to, because you might have sufficient harvest activity happening through all these harvest triggers that you've freed up enough licenses to cover any new requests that have come in that have been fulfilled that month. And so if you, by standing back this way, then you actually create several different benefits. Now, the benefits that we've seen created with this and these are real. Number one is it did do what we expected it to do, in that it helped to optimize the usage of software and therefore reduce the software spend. And it did that through actual reduction in purchasing, purchases of software. Also did it by better information at the negotiating table. We found that our clients have actually seen sometimes upwards of $1 million or so worth of negotiation leverage, money they left on the table in past negotiations, that when they were armed with better information, they actually were able to reduce and negotiate a much better licensing scheme for themselves. But some of the things that we've seen were things that we did not expect, benefits we did not expect. One was the reduction in purchasing activity. If you recall, the transactions do not go through purchasing. They are handled by ITAM, and then the only real purchasing activity is from ITAM. ITAM goes out and buys in bulk on a much less frequent basis, monthly that is, usually, or whatever the license terms allow. By doing that, we've seen purchase volumes drop enough that it actually has resulted in a savings for the client. Also, another unexpected benefit is that the client went, by doing the bulk purchasing, instead of onesie, twosie type random events, purchase events happening, when you collect them all together and you go out and you buy bulk licenses, our clients are seeing upwards of 20 points additional just because of the bulk purchases. They get into higher discounts as a result of bulk purchases. So those were savings that were not expected. We have found initial resistance, but it's a normal resistance that you find to any type of change. But once you work through it, we find clients actually embracing this. Finance embraces it because it increases transparency. They're always trying to increase transparency to the business. This increases it because the business can see exactly what they're getting charged for and why. They also embrace it because a lot of times finance ends up having to eat these settlements. They get very visible. So you get audited, get an unexpected settlement. It's got to come from somewhere. It ends up coming out of finance somewhere, and it gets made very visible. As a result of this market approach, it holds the business accountable, the actual users of the software, those that actually go out and don't follow the rules. They are the ones that are ultimately held accountable for the purchasing of licenses, and therefore it spreads out, reduces the surprises, significantly reduces surprises, and it spreads out those charges through this credit debit system over time, so that there's no big hit that they've seen. Another thing, one of the questions that we get sometimes too on this is, well, okay, you talk about focusing this whole thing on MSL titles. Okay, that might make sense. So what about the other titles? How are they supposed to be procured? And are you suggesting we have two processes that we're supposed to follow? One for MSL titles, how you get software, and one for non-MSL titles? And the answer is yes, actually. And while it seems like it should be a problem, in practice, it has not been a problem. And it's largely because what ends up being on the MSL also ends up being the software that's in demand. So almost all activity goes through this marketplace, and the stuff that doesn't go through the marketplace is onesie, twosie one-offs. That probably would have gone through one-off processes anyway, because they're probably not software titles that are purchased from your LARs. You have to go direct to publishers and set up terms. So we have not seen that as an issue. And even the implementation of it, generally if you envision how it's implemented, the end user goes to a portal, asks for software. If it's not on the list of software, then they just click a link and it routes them over to their normal process. So it's not like you have to teach the organization two different processes. They're just guided through it. So we have not found in practice that to be a problem. What we have found, though, is that this market approach really was put in place to address behavior. Because we found if you do not address behavior, then you get that age-old definition of insanity. Keep doing what you're doing and expect different results. And the organization will continue to behave as it behaved in the past, even though now you've put in place a process to help you understand your compliance and manage your licenses better. You'll be worked against by the organization's inherent behavior unless you address that behavior. So we find that the best behavior drivers we have found is our financial drivers. If you put a financial system in place, that gets people's attention and they'll follow that. So as I mentioned before, this is something that we've done with clients over the last 4 years. It's proven, does work. It takes a little while to get your mind around it. The main thing that you want to remember is you want to manage authorizations. You do not want to manage the licenses, so you want to kind of move away from that behavior. And the other thing you want to consider is take advantage of the terms in your licenses. You do not have to be, in most cases, you do not have to be instantaneously compliant at all seconds of the day. And if you've got time on your side, then take advantage of that time. Let all the probabilistic events happen, the harvesting and the new requests for authorizations. Let that settle itself out, look at it periodically, and then go and do your true-ups on a much more determined basis, so you can actually achieve the savings. And as I mentioned, we have seen significant savings, and we have clients that would be happy to share, anyone who's interested in how this works, or talking to someone who's done this, who would be willing to share those savings that they've seen. And with that, the moment everyone has been waiting for, that essential letter that you'll need to unscramble and possibly win this prize. Our letter is T. If you need to get hold of us, you can find us on the web at www.etelligentsolutions.com. All of our contact information is there. These webinar links are there, and a whole host of white papers that kind of talk through, like the MSL concept and some other concepts that you'll find up there. Help yourself. They are available under our resources section. With that, I'll turn it back over to Lynn.
Thank you, Brett. And again, I want to thank everyone for listening in today. And remember that the letter of the day that he just gave you was brought to you by eTelligent Solutions. And if you have any questions, obviously you can refer to the contact details here, contact them through their website. And this concludes today's presentation. Thank you, everyone.